Hello and welcome to our July 2023 market update with the latest and greatest in what we're happening. So let's move on, Max. You know the team, that's us. We're here and we're looking out for you. So let's see what we got. Underlying thesis. You do the underlying thesis.
All right,
Max.
I'll do the underlying thesis. All right, number one, 90% of the things you worry about never happen.
I was worried about that. Okay.
Never happens
And
usually.
it never happened.
Number two, we make observations, not predictions. Number three, Occam's razor. The simplest explanation is usually the best one. And finally, number four, Economics 101. We've all learned about it. Supply and demand applies to markets as well as most products.
So here we go. All right, current market indices. This is as of the close of business, July the 19th, 19th or 20th. That was yesterday, Thursday. The Dow, which is now making a big move, we've now been up, at least on this recording, 9 days in a row. The longest since 2017, I think they said.
2019.
2019, okay, up 6.25. Standard and Poor's 500. Look at the circle all the way down. Still the leading, which is up 18%. By the way, the advantage of the S&P over the Dow. The S&P is a much broader index. How many stocks in the S&P 500, Max?
499.
499. How many in the Dow? 30.
29.
29. Okay. So the S&P is a much broader index, and it has more implications. We want to see it's broaden out. We're going to talk about that today. And then finally, the big boy for the year, NASDAQ. NASDAQ is up 34%, almost 35%, and it has been dominated by the big seven. I think it's Amazon, Apple, Meta, Microsoft. Who am I missing?
Google.
Google.
Did you say Amazon?
I said Amazon, Tesla, and
NVIDIA?
And NVIDIA, that was it. So as a matter of fact, we might see a little short-term correction. Some of the indices have to rebalance because those seven stocks have overwhelmed everything else. And we do want to see some more breadth in the market. So NASDAQ the leader, S&P at 18 is great, Dow at 6 and change. We think the Dow is going to get stronger as the breadth moves out. All right, onward. So now you can see the Dow Jones Industrial Average. You see the end of the chart. You look at that big run up. Those are the last 9 days. There's the 20-day moving average, the 50-day, the 200. All the trends are up. Next one, Standard & Poor's 500. You see the same thing. 20-day, you see the big run that we've had. By the way, I don't remember, but when did we put out the coming bull market? That was in February or March, wasn't it?
Yeah.
So we're a couple of months early, but it's coming through. So the 20, the 50, and before we move on, and by the way, if you look at the bottom, you'll see in yellow it says the Golden Cross. All three of them have had this Golden Cross. And all the Golden Crosses, when the 50-day moving average moves through the 200-day on the way up. If it does it on the way down, it's called the Death Cross. On the way up, it's called the Golden Cross. Now, that's the S&P. Watch this one. The NASDAQ has been a rocket ship. Again, led by those big, the Amazon, the Apple, the Meta, the Facebook, the Google, the Tesla, and NVIDIA. That's the one that keep dropping. So they're going to spread out, but that trend has been strong. Again, 34%. First of the year was choppy, and now we're taking off. All right, let's roll. So the big issue last year, what caused the market decline, what hammered not only the banking system, but the market, the Fed moved interest rates up 20-fold. We went from 1/4 point to 5% in 1 year, trying to combat inflation. Inflation peaked in June at a little over 9.1, and now we've come down. There's a 25% drop in the index. That's the Bloomberg Commodity Index, and you're going to see in a minute all the other commodities. Here's the sampling. This is coffee, lumber, I forgot. Oil
and wheat.
And wheat. All of them have come down. You can see the peaks made back in January. So inflation's under control. The Fed slowed down raising rates. We may see one more increase or not. It'll be 25 basis points. My bet is we're not. We'll see what happens. There's been a lot of debate this year whether we're going to have a hard landing, a soft landing. I've been in the camp of the soft landing, and now it looks like we're going to have a soft landing. All right, let's move on.
I think we differ on that. I think we're going to have a raise.
Oh, you think you're going to go
Yeah.
the quarter? Okay.
We'll have a
We'll
little
see.
side wager.
We'll have a side one. Oh, what did they do in trading places? I'll bet you $1.
Yeah, I'll bet you
Okay,
$1.
it's $1 bet on that. All right, so we'll see. How are you in a hard or soft landing?
I think we're still going to have a soft landing, but I think that the market's already baked in at 25 basis points.
Correct.
hike.
The market has baked in at 25 basis points, another quarter of a point. We'll see. Okay, this month in the market, we'll talk jobs, inflation. The Fed is fed up. I like
Fed is
that.
fed up. And housing prices.
prices. All right, onward. This is for you.
Quitters quit quitting in recent months. Wow, that's a tongue twister.
Say that again.
Quitters quit quitting in recent months. That's definitely a tongue twister.
I'm glad I quit and let him do this one.
Americans have quit quitting their jobs. Gosh, wow. There's the tongue twisters all over this one.
I'm telling you.
All right, so what we're talking about in this article is Americans have stopped quitting their jobs. That was a big thing in 2021 and prior to 2023. A lot of Americans were quitting their jobs and then job hopping. And where they've seen a slowdown of quitting, and that's a good thing for the Fed because that means there's less job openings.
So they quit quitting. Okay,
So they've
I
quit
got it.
quitting.
Okay.
So inflation eased to 3% in June, the slowest pace in more than 2 years. Let's go to the first paragraph. We'll quickly go through that. Inflation cooled last month to its slowest pace in more than 2 years, giving Americans relief from a painful period of rising prices and boosting the chances that the Federal Reserve will stop raising interest rates after an expected increase this month.
See, I'm at the first half of the sentence that the Fed will stop raising. He's at the second half after this month.
Yeah.
We'll see. Okay.
We'll see what happens. All right, the Fed is fed up. God, there's tongue twisters
I'm
all
telling
over
you,
this.
jeez.
All right, some Fed officials supported raising rates in June. So we'll go to the first box. The Fed last month held its benchmark federal funds rate steady in a range between 5 and 5.25%. Its first pause after 10 consecutive increases since March of 2022, when officials raised it from near 0%. So we've had 10 consecutive increases, and as of last month was the first one that we stopped a Fed rate hike. Again, I'm in the camp that we're going to do another hike. Vic is saying no, and maybe later the following month. Oh, all right. So housing, what's going on with housing?
What's this? Housing, and more housing? What, you guys stuttering when we put this together?
Yeah.
Okay.
U.S. home prices posted its first annual decline since 2012. Wow. That means what? So Victor, what does housing make up? What percentage is CPI?
Housing makes up between 35 and 40% of the consumer price index. Housing and rentals, whether you're buying or you're renting.
So what Vic's saying there is if housing is going down, that means inflation is going down. So as we can see, home prices have declined the first time since 2012. So that means inflation is coming down.
Yeah, and there are some hot spots. South Florida is a hot spot. Texas is a hot
And
spot.
surprisingly, Chicago is a hot spot.
Chicago?
Yeah. We'll
Yeah, I wouldn't
go
have bet
down
on
to
that
the last part right here.
Okay.
Miami had the fastest
Yep.
home price growth in the country at 5.2%, followed by Chicago at 4.1%. And the worst was Seattle, which fell 12.4% on an annual basis.
So keeping with our theme, they're scattling from Seattle. Okay.
All right, so this is the Case-Shiller Home Price Index, which is a nationwide index which shows the value of homes across the nation. So as you can see, it's dipped quite a bit. It's starting to come up a little bit, but as you can see, it's dipped quite a bit since
That's
the
kind
high.
of like the Dow Jones of housing.
It is. It's
Yeah.
the Dow Jones of housing, or the S&P of housing.
Yeah.
All right, so these are mortgage rates. Mortgage rates, the top one is 30-year, the bottom one is the 15. It's hard to see, but the top, we're at 2 weeks ago we actually crossed over 7%. This one I think says 6.7 as of Thursday. So we're at 6.7%, and then the bottom, the 15-year mortgage is at 6.2. I think that says 6.25, 6.65.
All right.
All right. So the future, celebrity boxing. Whoa!
Well, look out.
So social media and artificial intelligence, or AI. So Big Tech's Battle Royale is coming, and the winner is you. All right. So I'm
I
sure.
think they're serious about this. Are they really?
Yeah, they're really serious. They're training. You might see pictures all over the web of Elon Musk and Mark Zuckerberg fighting UFC style in the Roman Coliseum. Italy reached out and said, "Hey, Mark Zuckerberg, Elon Musk, do you guys want to fight in the Coliseum?" They on Twitter and a few other social media sites have said yes, but we shall see. They've both been training.
They've actually been training.
They've actually
Yeah.
been training. Both of them have hired top UFC fighter as coaches. So we shall see. I think it'd be the most watched sporting event in the world ever if this were to actually happen. So
It's the biggest thing to hit the Coliseum in centuries.
in centuries, and they're both big. They're both Roman history buffs, and that's why they also wanted to fight in the Coliseum. So, all right, the rise of Twitter clones. Meta Threads, I'm sure a lot of you have heard about it. Meta Threads, the right needle to poke Twitter.
So what Meta is calling their competition to Twitter is called Threads.
Correct. So Meta basically went out and created a competitor to Twitter because they didn't like the platform, and they created a competitor to Twitter called Threads. So that also adds a little fuel to the fire as far as
That's Elon
versus Mark Zuckerberg.
Yeah.
I think they should honestly put a little, raise the stakes, and the winner gets the company.
But now, if I understand it right, Threads, they don't have hashtags. There's a number of things that Threads don't have that Twitter does have.
Yeah, there's a number of things that Thread doesn't have that Twitter has. So, and then Twitter's Threads says more, controls more what you say, versus Twitter's more open source.
And they got a big boost when they first started because
It was
Threads,
If it was the fastest growing social media platform ever, to quickest, I think that in 24 hours they got to 100 million people.
And why is that? Because they own Instagram.
They own Instagram and they own Facebook.
And they made everybody eligible for Twitter. I mean, for Threads.
And then on top of that, it's the fastest growing ever, faster than ChatGPT. Prior to that, ChatGPT was the fastest social media or media site to ever.
Do I see Josh dying to put in a comment on this?
Well, no, I was just going to say that they, according to what I read recently, like in the past couple of days, they've already lost 50% of their user
initial-
base.
yeah.
Of the
Oh,
initial
really?
User base
Yep.
I didn't know that. Wow.
On Threads. So it's a
Yep.
huge loss so far. But, Elon has one trick up his sleeve. Max is going to know what I'm talking about here with Vine.
With what?
Vine.
I don't even know what Vine is.
I didn't even hear about that.
Yeah. Well, it hasn't been, nothing official has been said, but
Oh, they're gonna. Oh, okay.
yeah, but couldn't you definitely
Yeah.
see Musk pull out Vine?
Yeah.
What is Vine? I don't even know what Vine
Vine
is.
used to be the TikTok before TikTok.
Oh.
So Vine, for those of you who are unaware, Vine used to be quick videos, and it was TikTok. If you know what TikTok is basically you post a quick video and you send it. That's the exact same platform Vine was. So I
That's
guess
old.
So-
That's back in the day.
yeah, that was back in the
Ancient.
day. That
So
was
TikTok
15 years
was the
ago.
transition to TikTok to Vine.
Yeah, and Vine was probably right before Instagram came out in 2012.
Well, maybe he's growing on the vine. We'll see.
And it's funny. It's funny because Vine back in the day was huge, and then like it suddenly disappeared, and TikTok came along. But Twitter outright owns the rights to Vine,
Gotcha. Okay.
and their servers were still hosting content. I think all the way up to 2018, even though the software shut down in 2016. I think.
Okay,
I don't know
gotcha.
those
All
years
right.
exactly.
All right. So, the regulation of AI. So, we're all starting to talk about this. I was actually listening to a podcast with Joe Rogan, and he was talking with the Microsoft ex-CEO about the regulation of ChatGPT, of AI. Is it good? Is it bad? I'll let you make your own decision, but right now, the government is starting to regulate AI using hiring tools. and this is in the state of New York. New York is usually the first ones to act in regulations.
So they're the first to regulate anything.
They're the first to regulate anything.
Okay.
So if you go to the right side of the screen, employers who hire New York City residents will have to publish impact ratios on their websites along with notices that they're using, that they take away job applications that are requested of an alternative to being screened or sorted. So basically, New York is regulating AI because AI is hiring people based on qualifications, but they need to look and incorporate race. And so that's why New York is regulating. All right, the growing impact of artificial intelligence. AI has the potential to bring out numerous positive changes in society, including enhanced productivity, improved healthcare, and increased access to education. AI is right now, especially in improved healthcare, they are helping figure out diseases and different cures for diseases
And doing diagnosis.
and
They
doing
can-
diagnosis light years ahead of us.
Yeah, they say they can do 90% accuracy in what's coming down the road inside you using AI. And they're not replacing doctors, they're giving doctors a better tool.
They're enhancing
NVIDIA.
doctors.
Yeah.
They're enhancing doctors, and if you don't use it, and if you'll die basically.
Right, yeah.
If you don't adapt to the new technology, you'll die. We've adapted, and we'll get into that, but the doctors need to adapt, and this is only going to help them in the long
You know,
run.
it's like adding MRIs, that was new, or CAT scans.
Or
that was new.
computers,
Or computers.
right?
NVIDIA went ahead and they just invested a ton of money into one of these firms that is going to be using AI to help develop vaccines. And
Yep.
it was a substantial amount of money. It was substantial enough that they actually talked about it on television.
Gotcha.
And then also, with Elon Musk has now come out with his own AI company to compete with ChatGPT, with
Google's, is
Google's
it brand?
AI.
Is it brand or Rand?
No,
Google's.
it's
It's Bard.
Bard.
Bard, that's it, okay.
And then so Elon Musk has come out with his own, and so
It's
we'll see.
XAI, he called it, right?
XAI, yeah. And so we'll see what happens there. And then now Apple's also come out with their own AI. So it's a new AI race, and that usually is the start to a bull market, is some new technology.
Some major enhance of productivity, and that's exactly what AI is. And again, you got two choices. You can get left behind, or you can embrace it
And adapt.
and adapt. We've chosen to adapt. How have we adapted, Matt?
All right, how have we adapted?
There we go.
So there we go. How have we adapted? The tax return analysis using AI-assisted software. So we're using a leading edge technology. We analyze and review your tax returns for a clean and easy tax review analysis, providing a summary of key figures such as AGI, adjusted gross income, taxable income, marginal rate, and then a summary of your income sources, and then Medicare Part B and D tiers, which are crucial points. So this is an observations of planning points and actionable insights to lower your taxes.
Now, here's the deal. We find that most tax practitioners, they file your taxes. But ask yourself this. When was the last time that your tax preparer called you in June or July or August and said, let's do some tax planning for next year? By the time you normally talk to them, the year is over. You're talking in January and February about the previous year. By that time, you can't do anything.
Yeah.
So we're not trying to replace, and we don't replace tax preparers. We're trying to go through your tax returns, look for planning opportunities, look for issues you're missing, look for ways to enhance what you can do, and we do this using an AI program. So if you'd like us to do that for all of our clients, it's part of the service. I should say all the fee-based clients, it's part of what we do. Give us a call, send us last year's tax return, and we'll run through it, and we will work with your tax preparer as well.
All right, so the market history, as you can see on the bottom, is the bear markets. We've gone through this slide before. The bear markets and the bull markets, there's more bull markets than there are bear markets, especially you see those giant mountains versus those little valleys. You will see Difference is the pattern has repeated itself since 1926. Bear markets are 11 months on average versus bull markets are 6.5 years.
So-
It pays to be invested in the market.
By the way, this is one of the reasons we call the coming new bull market. The bear market we've gone through, statistically, if you look at the average bear of 11 months, this last market started down January 4th of last year. If we go through the end of May, it was 17 months long. It was long in the tooth. The issues on last year were rising interest rates and inflation. Nowhere near the banking and real estate crisis. Nowhere near the dot-com. So it wasn't that bad of an economic issue. So we thought we were long in the tooth on the bear markets, and we've only got a pattern here that's 1926, so it's only repeated for the last 97 years. With
Not
that,
as long as the church.
not as long as the church, yeah. Yes, not as long as the church, but been around for a while. So we called back a few months ago, again, the beginning of the new new bull market, and this is why. Even with all the problems, you're still going to see that consistent pattern. And, you hear the term a bull market walks up a wall of worry. We're still going to have issues. It's not going to be straight up. But obviously, what you've seen, especially in the last 2 weeks, we are already in a new bull market, and the average bull market lasts how long?
6.5 years.
6.5 years.
And again, to go off what Victor was saying, bull markets end on overexuberance and they begin on skepticism.
Yeah.
So-
And we got more skepticism right now than
Yeah.
overexuberance.
Yeah,
Absolutely.
exactly. And you could feel that pit in your stomach of, oh my gosh, when you start hearing a tip from your cab driver or from your now Uber driver, that's when you know, okay,
We're getting
maybe
near
we're
a
a little
top.
long in the tooth. But when everybody's skeptic, oh my gosh, is the market going to crash? Oh my gosh, is this going to happen? That's when you know, okay, there's still money to be had. There's still money to be put into the market.
Yeah, we have record amounts of money on the side. And remember, cash is the fuel for a bull market.
All right, so professional athletes and teams have coaches. The do-it-yourself doesn't work as well. As you can see, this isn't our chart. This is a 20-year annualized chart by Dalbar. The average market return is 6.1%, while investors' return, let's give it 2%. The reason for that, Vic?
Emotions. They get panicked out. They don't have a plan. They don't have any. I cannot tell you how many times when we're interviewing a new prospect or client, we'll ask them, "Can you tell me what your buy and sell strategy is?" And they go, "What? What do you mean a strategy?" "Yeah, I read Money Magazine." "No."
Or listen to Kramer.
Oh, don't even go there. Okay. Or listen to Kramer. You got to have a discipline no matter what. That's the reason all these teams have coaches. No matter how good you are, you need a third-party coach helping you if you really want to be your best.
All right, so we'll tie it all together. Those that fail to learn from history are doomed to repeat it. Those that learn from history can prosper. We add historical context. Why does history repeat and so many fail to learn?
Because although times change, human nature does not.
All right, so our on-demand seminars and educational events to watch. Number one is what baby boomers need to know about their retirement.
That's all about Social Security planning.
Taxes in retirement.
That's all about paying more than you need to.
Estate planning today. And learn to craft your legacy.
And by the way, I got to say a quick thing on that estate planning. Right now, the exemption is a little over $12 million a person. What most people don't realize is December 31st, 2025.
2024.
20, was it? No, I thought at 25. 26 was the change.
Oh, okay.
I think, yeah, starting January 26, all of the current tax rates are gone. The current tax plan expires 12/31. I'm pretty sure
You're right.
it's
It's 25. You're right.
25. So this is going to be a shock in a second. Right now, you have an exemption of a little over $12 million per person, a husband and wife. That would mean they don't have to do estate planning or worry about estate taxes for $24 million. Max, what did you tell me their thoughts of it going to?
The thought right now is that they're going to 6 million husband and wife, but at the low end, they're talking about 3.5 million
per couple.
Per
That's
couple.
1.5 million. That will change all the estate planning tremendously. So yeah, we need to watch that. You need to do things. You can't make all the right changes after the law. You need to plan ahead of time, which is why we do the tax returns analysis. You need to be proactive to do it efficiently. And then finally, what's the last one?
Savvy IRA planning. So that will talk about your planning going into your IRAs and how to be tax efficient with it.
You know, and what's interesting is all of these, the baby boomers and Social Security, the taxes and retirement, the estate planning, the Savvy IRA planning, the thread that keeps them all together is they all have tax implications. And Social Security, you end up paying too much taxes or you make the wrong decision. If in your retirement you got to manage your RMDs with your others, sometimes it pays to take them out early so you don't have to take bigger ones later. Estate planning, you can, that's all about estate taxes. And Savvy IRA planning is managing the RMDs. So it all ties together. One of the things we do, obviously, a lot of investment management. But one of the other things we try to add is you've got to put that together with managing taxes as well.
Mm-hmm. All right. So thank you for joining us today. And
wait a minute. And remember,
we're here looking out for you.
All right. Thank you for joining us.